Brendan, we turn to you often because your ETFs, and especially the K-Web, are often seen and used as a way to express views on that Chinese tech market. So what exactly do you glean from the headlines coming out of China, and whether or not this trend could be upwardly sustainable?
Yeah, good morning, Dom. Yeah, certainly we're seeing a bit of a pullback overnight that we saw. Traders were trading overnight, taking advantage of the strong move yesterday. So we're going to get a little bit of a pullback during U.S. trading hours today. Again, market really didn't trade, see that follow through like we would have liked to have seen. But I think a lot of that is we're waiting to see more policy coming out of the China Economic Work Conference, which is both starts tomorrow, ends on Thursday, should give us a little more guidance on policy trajectory, which, based on yesterday's announcement, seems to be much more consumption focused, as well as an imminent lowering of interest rates coming.
Brendan, you're the boots on the ground, so to speak, right? With this whole investing side of things with China, you've got a lot of expertise there. You focus a lot on the Chinese markets. From a chief investment officer standpoint, like you are, what exactly would you be looking for, headline-wise, to make you feel either more or less comfortable with this tech scene in China?
Yeah, I think the fundamentals are quite strong. Valuations are very low, very strong buybacks from these tech-driven, entrepreneur-founded companies. So there's a lot of positives. I think what we're really facing, Don, is a headwind. Call it scar tissue, skepticism, just really people doubting that the Chinese government's commitment to domestic consumption, to righting the ship. But I think yesterday's announcement was, considering that it came from the Politburo, a meeting presided over by President Xi, really shows a commitment there. At the same time, we are facing a little bit of a headwind in terms of seasonality, that a lot of professional investors have closed the books for 2024. And so I think a lot of money is still on the sidelines. Maybe we'll see some of that rebalancing taking place toward the latter part of the year, early next year. So I think a lot of investors are out of the China trade. Maybe we see some of that money get pulled back in starting next year.
Brendan, the last time the Chinese government and the Chinese Communist Party went after a tech sector, it was its own tech sector. Yeah. And it took a lot of the air out of that market. We saw just how forcefully those tech companies in China took it on the chin because of the Chinese crackdown on them. Now it's NVIDIA, it seems like, and that's one of America's biggest chip companies, one of the world's, if not the world's biggest chip company. What exactly can we expect out of China, and how could it affect the global semiconductor chain?
I mean, NVIDIA is a very widely held company, obviously here in the United States as well as globally. So I think it's the first time that you've seen a U.S. stock react to some of the political tension, some of the geopolitical tension between the United States and China. Certainly Chinese equities investors have gone very underweight because of those same concerns. And it just shows how interconnected the U.S. and Chinese economies are, why diplomats from those two countries should take a page from the business world, where obviously companies are getting well with one another just fine. I mean, actually, the China export-import data overnight shows that actually China's exports to the United States were very, very strong, showing that China needs the United States as well. It does look like, Dom, I did some looking at this situation, and it looks like the regulation, what this, the State Administration of Market Regulation, what they're looking at is specific to the Mellanox acquisition back in mid-April of 2020, that when NVIDIA bought Mellanox, they said that the company had to kind of unbundle some of its sales in China. So this investigation is about whether or not NVIDIA did fulfill that promise that it made to the Chinese regulators at the time. This says that if there is a violation, according to Article 58 of the anti-monopoly law in China, that they could be fined upwards of 10% of the previous year's sales. I don't know if that's the China sales, which, to your point, it's about low mid-teens to China. So it looks like it's a very specific issue about this one acquisition.